and welcome to today's live technical analysis. I think we're going to be starting off with oil during today's session. So, why are we going to be focusing on oil? Well, OPEC Plus, their ministers had a meeting yesterday, if I'm not mistaken, upon which they reiterated their commitments to maintaining the current oil production cuts. So, in theory, that may have provided some support for the price of oil. But as you can see on our chart, in particular the 4 hour chart, it's moving in a downwards fashion. If I move on to the weekly chart, you could see there is a very strong bearish candlestick that has been formed. The RSI is moving towards 50. Now, had this been a steady decline, then perhaps we have maintained a sideways bias. However, based on the sheer size of this strong bearish candle, I would be maintaining a bearish outlook for the price of oil. On the daily, as you can see, the past 2 days, there's a strong bearish sentiment. So this is today, that is yesterday. So even though OPEC reiterated their commitments to maintaining the oil production cuts, oil has moved lower. So why? Well, in our opinion, it's due to the fact that the demand for gasoline in the US, if I'm not mistaken, that came out on Bloomberg recently, has hit 25-year lows. It's actually the lowest level since 1998. Therefore, there is concern about demand for oil. So consider this scenario. If you're reducing oil production in order to artificially pump up the price of oil, so by reducing supply, constraining demand, and since there was high demand, pushing the price of oil higher. As you can see, closer and closer to the $100 per barrel figure that was being touted as a potential target for oil. So that may have been a target by cutting production, etc. The issue with that is that once you actually don't have that demand and you've been cutting production, then the price of oil will perhaps face a harder time moving higher. And at the current level that OPEC is, in terms of the amount that they've been cutting and the resistance that they've been facing in those cuts, I personally think that their current levels of oil production cuts are the levels that they're going to be maintained for the rest of the year. Them increasing production cuts, in my opinion, will be met with fierce resistance from the other oil producing nations and potentially even defying OPEC as well if they decide to attempt to increase oil production cuts in order to boost the price up. So as you can see, it's reaching levels that were last seen at the end of August of this year. It's broken below our support level of S1, broken clearly below S2, and is now moving towards S3 which is at 81.40. Note that the S1, it made a slight retracement to the mid-range of the Bollinger Bands, validating our downwards moving trend line once again before moving lower, making a clear break below S1 and S2 within 2 4-hour candles. Now, this might have been a small temporary market correction, not even a market correction, it's like gaining some support before moving lower, aiming for S3 at 81.40. So some of you may be asking, so now that it's broken below both S1 and S2, what are we going to be doing? Well, this is support and resistance for S1 and S2. S3 will become S1. So let's just fix our charts. T430. Slightly larger so that it's easier to distinguish. So R1, 90.40 becomes R3. Let's fix the line as well. Let's make it slightly bigger. Taking this turning point, once again, it was validated. S1 was validated at this point here. Note how it nearly closed and opened on S1. It's still a valid support level though, perhaps slightly higher. If you want to be precise, I don't think it would be 87. Actually, 87. $87. If we're being exact on that. Divided by the wick as well. So we're pretty close to the support level that has now turned resistance. So from a technical and from a fundamental point of view, we would be maintaining a bearish outlook for the commodity. R2 70 at 87. R3 at 90.4. And we're going to have to look for our new support level for S2. So for S2, we have S1 at 81.40. I could bring S2 78.80. Some of you may be asking why. I'm aligning these three candles, bearish and bullish candles. I was trying to line it up with this turning point right here where there was a strong bearish market sentiment before finding some support and then moved higher, but they don't perfectly align. So I'm going to be taking the most recent example. Had I placed it at this level here, I think it would have been perhaps slightly too close in comparison to our other resistance levels. So we're just allowing it some room to move. So R1 at the R2, excuse me, at the 78.85 figure. Comes this one. And then for S3, for S3, it's the $73.95 mark. It may be slightly further away from our S2 and S1, but still, I do believe that if it does break below the $80 per barrel figure, then it is possible that it might move even lower. So maintaining a bearish outlook for the commodity. It will actually be a bit more appropriate to have it at the 78.20 level. And then S3 at the $73.95 mark. So from a technical point of view, it's broken below two support levels. The RSI is near the 30 figure and is currently at the 21. As you can see, 21.11, implying a strong bearish market sentiment. I do not believe that it is oversold at this point in time. I do believe that it may continue moving lower based on demand side issues that are currently occurring in the oil markets. Therefore, I would expect oil to move lower. from a fundamental point of view and from a technical point of view, as our downwards moving trend line continues to be validated as well. Now, given that it's the Bollinger Bands have widened extremely, as you can see, the distance is above R3. For a bullish outlook, it would have to break above R2 as well. Simply breaking above R1 would not be enough for a bullish outlook. It would have to break above R2 as well. Why? It's coinciding with the mid range as well and would make a break above our downwards moving trend line. For a sideways fashion, staying between R1 and S1, and for a bearish outlook to continue, it, in my opinion, would have to break below S1 and move towards S2. So that's it for oil. Moving on to the euro against the dollar. Now, the euro against the dollar appears to have stabilized somewhat and is now moving in a slightly sideways fashion. Note that it's still validating our downwards moving trend line right around here. But based on what I'm seeing now, I would not be surprised if it breaks above, but fails to break above R1. So I think that it may move in a sideways fashion between S1 and R1. Note that the RSI indicator below our 4-hour chart is near the figure of 50, implying a neutral market sentiment. In terms of financial releases, we have the US employment data, which is due out tomorrow. So during the week, we had the following. We had the jobs job openings that came in much higher than expected, implying a resilient labor market in the US. Then you had the ADP non-farm payrolls coming in at 80K, implying that actually it may not be as tight as we had predicted. And tomorrow we're paying attention to the US non-farm payrolls figure. It will be very interesting to see the average hourly earnings rate and the NFP figure. Employment rate as well, yes, but I'd be placing more emphasis on the average hourly earnings instead of the NFP. It is interesting to see what will come out. Personally, I think that the labor market in the US is beginning to loosen. If we combine it from an oil perspective, so there is less demand for oil, people are perhaps moving less, perhaps they're working more from home, reduced costs for companies, therefore reduced office space, therefore going on, less demand for workers to fill up those office spaces. Maybe you need less. It's interesting. And you have high interest rates, and inflation is still slightly high as well. All of those combined together may be impacting the US employment data, therefore potentially weakening the dollar. So on that, we maintain a sideways fashion up until the NFP figure, which is due to release tomorrow in the afternoon. Paying our attention for that. So for now, sideways. Cable, it did bounce. It did break above R1. It's finding support at our previous resistance now turning support, but it's still validating our downwards moving trend line. RSI near 50, so I wouldn't switch to a bullish outlook. I'd maintain a sideways fashion as well for cable. And if we're going to be maintaining a sideways fashion, we need to readjust our support and resistance levels. I'm taking as many opening and closing candles as possible at this point because I'd have to bring my support level S2 slightly higher, the beginning of this order block as well, and then slightly too high. There's a bit of a distance between R1 and R2, but that's the way it is unless we bring R1 slightly higher. 1.2375, that's for R2. So since it's a bit too bit of a gap, we could bring resistance level, our resistance level at the first resistance level at the 1.2260 at this swing high before it moved lower. So maintaining a sideways outlook for the pair between resistance level at R1 and then support level at S1. S1 could actually be brought slightly higher, 1.2065, keeping S2 and S3 at the same levels that we had them previously. So sideways as well for the British pound against the US dollar, waiting once again for the NFP figures. Interestingly, the Conservative Party, according to a new Ipsos poll that was released earlier on today, is in the lead for with about 44%, which is very interesting. The dollar against the Japanese yen, we're seeing that it is rebounded following that significant drop down to our support level at S2, validated this one. I would still maintain a bearish outlook for the pair, simply due to the fact that there was this very strong movement to the downwards to S2, came back up, small market correction, didn't break above the mid range of the Bollinger Bands either, validated it again, aimed for S1, tested, came back up, and I would expect it to break below S1 before moving towards S2. If it comes back up to R1, then we may see a potential government intervention. Note that as of yet, there has been still no official announcement that the government had intervened, but it does sure look like it. So it comes back up to R1 or around R1, near the $150 mark. We may see another significant move to the downside as well. Technical, it's near 50, which may have been implying unusual market sentiment, but in the grander scheme of things, it's a bearish outlook for the pair on a technical basis as well. Australia's trade balance earlier on today came in much better than expected, which may be providing support for the Aussie on the day. As you can see, it's in the greens. It aimed for R1, tested and failed to break above. Now, it was moving in a downwards fashion based on our downwards moving trend line. It's broken above the mid range of the Bollinger Bands as well, so I'd be maintaining a bullish outlook for the pair, purely on the fact that Australia's trade balance came in better than expected. But for a bullish outlook to occur, it will have to break above R1 and move towards R2. For a sideways fashion, it would have to fail to break below S1. And for a bearish outlook, it will have to break below S1 and move towards S2. Now going on to gold, note how beautifully it's been running along our support level of 1,819. Look at let's just count it. 1, 2, 3, 4, about 6 or 7 candles, and now the eighth, showing that this is a significant support level for the precious metal. RSI has broken above the 30 figure, but it's running along the figure of 30, implying some bearish tendencies remain in the precious metal, potentially garnering support before moving lower. But if it breaks above the mid-range of the Bollinger Bands, look how nice it came at the mid-range, moving lower. If it does break above, then I would be switching to a bullish outlook for the precious metal and aiming for the resistance level of 1,865. Just place them in as well. Interestingly, what could potentially affect the price of gold is the fact that there is no clear individual that is going to be taking off from the now ousted and former Speaker McCarthy. And why is that important? Well, the US House and Senate passed a bill that would temporarily increase funding for the government up until November 17th. A vote is due to take place next week. They're hoping that they're going to be having a new speaker by the end of that week. But based on McCarthy, who took about 15 rounds of voting and 4 days to be elected, we might actually see that happening again, because you have the Republicans who are hell bent on going against the Democrats and demanding more spending cuts, etc. You have the more moderate Republicans who are willing to compromise on some issues. And then you have the Democrats who will most likely not vote for a Republican speaker. Therefore, it's up to the Republican Party to figure it out internally who they're going to put and why. So, how could this affect the price of gold? The closer we edge again to another potential US government shutdown, we may see gold's price appreciating. If there is no clear speaker, that could influence the legislative body of the United States of America in terms of up until a new speaker is elected. If I'm not mistaken, the business in the House cannot proceed, so they need a new speaker and they need one fast. The longer it takes, the worse it will be because they need to elect a new speaker, then they need to agree on new terms all over again. So it would be very interesting to see how that all plays out next week. We have S2 for S3, 1,740. Fitch actually said yesterday that even if the potential impasse, excuse me, the current political impasse in the United States would not warrant another downgrade to the US's credit rating. But if they do default and no deal is reached and they do enter a shutdown for a prolonged period of time, I would not be surprised if they actually downgrade them again. But that remains to be seen. We're going to be looking at the Dow Jones 30. Let's clear our chart. Very nice. So we're looking at the daily chart for the Dow Jones 30, aka US 30 cash. From a first glance, it may appear to be slightly oversold, but it's continuing going along the figure of 30 on the RSI indicator, implying a bearish market sentiment. So at some point, it may be due a small market correction, perhaps at this point that we're going to be noting right now. This, in my opinion, would be the first level of resistance that may be faced by the bulls should they take over. That would be R1, R2, 3,400, 34,960, excuse me, 70. Nice. And then for R3, 35,720. R1, R2, R3. S1, 32,885. Support level S1. And then for S2, 31,840. This would be S2, and then for S3, aligning the swing high with the wicks before strong move in an upwards fashion in order to confirm that this may be a potential support level at the level of 30,295. So we have S3. So we have R1, R2, R3, S1, S2, S3. Maintaining a bearish outlook for the index, RSI below 30, perhaps a downwards moving channel as well. It's a fairly narrow downwards moving channel, but downwards moving channel nonetheless. So maintaining a bearish outlook for the index. And let's just place S2 and R1 or 2 or 3 charts. R2. Today we have numerous Fed speakers and actually ECB as well. So they may potentially affect the markets, and they're predominantly during the American session and the Asian session as well. R1, R2, and R3. And we're going to be looking at one more. So Tesla, yesterday we said we would maintain a bearish outlook for the stock. Apparently, I was wrong, and it has now broken above our resistance level. From a fundamental point of view, I still maintain the view that there may be an issue in Tesla's Gigafactory in Germany. They may go on strike. There may be issues. They say that they're still on track to deliver. There are approximately 1.8 million vehicles by the end of the year, but time will tell. They have earnings in 2 weeks, so we'll be looking close eye, keep an eye out for that as well. Readjusting our support level, resistance level at the 265.85 figure. For S1, I'd still keep S1, S2, and S3 the same. And the justification behind that is the fact that the Bollinger Bands, especially the lower band, is running along S1, so validating it if it comes to stay and move in a sideways fashion at S1. For a bullish outlook, it would need to break above R1, 265.85, aiming for 296 afterwards. For a sideways fashion, remaining between S1 and R1. For a bearish outlook, it would have to break below our support level at S1 and then move towards S2 at 198. Just place them in. And then 165. Then R2. I'd also keep an eye out if there are any new news regarding the EU's probe into EV companies that have received Chinese subsidies, and there's been about a week since we've heard something regarding that probe. 228.75, actually 0.80, and we'll just go. But still, from a fundamental point of view, I'd still maintain a bearish outlook for the stock. Regardless if it appears that it's moving in upwards fashion, I'd be still maintaining my bearish outlook, aiming for it to break below S1. And with that, that does it for today. Thank you once again for watching, and I'll see you next time.
welcome to another of our great educational videos. In our previous video, we looked at margin level. Today, we'll be looking at margin call level. Margin call level is when the margin level has reached a specific level or threshold. When this threshold is reached, there is the danger of having some or all of your position liquidated or closed. For example, some forex brokers have a margin call level of 100%. If the margin level in your account falls to 100% or lower, a margin call will occur. A margin call is a notification that alerts you that your margin level has fallen below the required minimum level, the margin call level. Therefore, you need to deposit more money in your trading account or close losing position to free up margin. When the market is moving against your open position and the margin level falls to the margin call percentage, you will receive a margin call warning on your device. This is basically a warning that the stop out level is approaching. In our next video, we will look at stop out level. Stay
Alright, so today's webinar series is on top price action patterns. Okay, so as usual, guys, this is the disclaimer. So everything in this video is educational in nature and nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade, yeah? Okay, I'm your host for today. My name is Woon Hong and I'm an investment analyst at Everest Fortune Group. And we have a special collaboration with IronFX to provide you the good stuff every day. Okay, so for the agenda, we'll be going through firstly, what is the anatomy of a candlestick? Secondly, will be price action trading approach. Thirdly, will be top 3 single candlestick patterns. Fourth, will be top 2 double candlestick patterns. And the second last one will be top 3 triple candlestick patterns. And lastly, how we can combine candlestick patterns with what we have learned so far. Okay. So moving on to the anatomy of a candlestick. So I'm pretty sure that you guys, if you have been trading pretty frequently and you have been trading for a rather long time, you understand that if you see this bullish candle right over here, the open price will be from the bottom. Okay, then the close price will be right here. Okay, so if the open is from the bottom and it closes here, and you can see there's a very obvious green candlestick, right? So this shows that there is bullish momentum. Okay, we can also see that let's say the wick is right here. This is the upper wick and this is the lower wick, and we can see if the lower wick is long, means that it is rejecting a particular support level, and if the upper wick is long, it is rejecting a resistance level. Okay, so just imagine here, if there's a resistance level right over here at the top, and if the wick is long, so it's rejecting the resistance. If the wick is long for the lower wick, means it is rejecting a support. Okay, so very simple. So for bearish candle, the open price is from the top, so it's the opposite of a bullish candle. So the close price will be at the bottom right here. Okay, so the longer the wick right here means that it is rejecting a resistance level, and it's good in a sense that for a bearish candle, if the wick is long here and the body is quite obvious, means that it's in a bearish trend. Okay, so basically for both candles, you just have to remember that the longer the body, right? So if the body is long, it means that for either of these candles, let's say for the bullish candle, if the green candle is long, means it is bullish, okay, very bullish. So the longer the bearish candle means that it's more bearish, okay. Next, we are going through price action trading approach. So what is a reversal and what is a breakout? Okay, so very simple. A reversal basically means that at a point whereby the price is already at a very high, then let's say we use this channel as an example, we can see that during which each time price touches the end of the channels, so we can see we can use this as a resistance level, right, for the channels. So price has reached this channel's resistance and actually fall downwards. You can see this very long bearish candle means that it is very bearish and going towards the support level of this channel. Okay, so that's just the main gist of reversal. So from bullish become bearish, and from bearish can become bullish. Okay, so we have very different traders. So let's say we have the traders that trades reversals only on the high time frame. So what we call them would be swing traders, right? So you can see here, right here, there is a candlestick, meaning there's a morning star formation, which is this small little candle right here. I'm not sure if you guys can really see it carefully. So this candle in the middle is a morning star formation because the body is extremely small while the wicks are very long. Okay, and we can see right beside it, there is a engulfing candle. So if you guys are confused about these candles, later on I'll be explaining more about them in detail, okay? So the reason why there was a reversal from this point onwards, firstly, was because it has already touched the end of a channel, of the support of the channel, and there was a morning star formation. So dojis and morning stars are signs of reversals for candlestick patterns. Okay, and then right beside it we have a bullish engulfing candle, right? So that is why price immediately shot up, because with these two combinations, either the doji or the morning star combined with engulfing candles is very effective in identifying reversals, especially on the higher time frames. Okay, just note that down. So we can see that price has actually broke past this overlap resistance right here, and you can see that there isn't any bearish candles and only bullish candles, shows that price has already reversed pretty quickly in a bullish momentum. Okay, so breakout, what is a breakout? So breakout is basically meaning that price broke out of a major or resistance or support level. So that's what we deem as a breakout. Okay, so resistance area to break through would be this area right here, because this is a overlap resistance area. Because we can see price was a resistance right here, broke through, came down to act as a support, right? So came down to break this area again, and price is actually respecting this overlap resistance area because the body of the candlestick, just focus on my mouse right here, the body of the candlestick is not able to exceed this overlap resistance, but more of having many wicks over here. Okay, so that is why we can see that there was a drop from this resistance level right here. So next, we can see that immediately it broke through after this candlestick formation is formed, and there's a what we call a three white soldiers. So these three bullish candles over here. Okay. Yep, see, three white soldiers. So there are many different kind of candlestick patterns. So you don't have to memorize all of it. So later on I'll be going through what you should memorize, and maybe when you're trading, you could have a piece of paper printed out with these candlestick patterns right beside you. So if these candlestick patterns actually appear, then you will know that, okay, maybe I should actually enter a trade right here because I have my support and resistance levels. Secondly, I have these candlestick confirmations. Okay, then coupled with maybe Fibonacci or any other indicators that you are using, then with at least three confirmations, you'll be more confident in taking a trade. Okay. All right, then from there, we can see that it actually broke through and even broke this high right here to the upside. Okay, so what are the top three single candlestick patterns? Okay, so the top three single candlestick patterns, firstly, will be the hammer. So how to describe the hammer in a bullish, if you want to go for a bullish reversal, would be the body of the candle has to be this small, okay, has to be this small, right? And the wick is way longer at the bottom. Okay, you can see the wick is way longer at the bottom. All right, and it's a green candle. So this shows signs of a bullish reversal. Okay, so for a bearish reversal, will be this hanging man. So basically, it's just different terms. So there are hammer, hanging man, and many other names. But for bullish, it's hammer, and for bearish, it's hanging man. So they look the same, just that the candle color is definitely different, and this is basically for bearish trend. You have to memorize that before this hanging man appears, the price needs to be bullish for it to reverse as bearish, right? And same for bullish reversals, it has to be bearish first, and then once this candlestick appears, then you will know that it's a sign for a reversal. Okay, next will be inverted hammer. So inverted hammer is basically the opposite of a hammer. So hammer looks like a, let me give you guys an example, like a marshmallow on a stick, right? So usually you'll put the marshmallow at the top of the stick, but for inverted hammer, you're basically just putting it upside down. Okay, so this just is easier for you guys to remember that way. And for shooting star, it's basically the same as an inverted hammer. It's just that is bearish right now. Okay. Okay, next, dragonfly doji. Okay, so dragonfly doji just looks like a nail, right? So a nail, it just looks like this, right? Let me just see if you guys can see my finger. Okay, so just looks like a T. Okay, T will be easier for you guys to remember maybe. So dragonfly doji is just look like this, and then gravestone doji just looks like this, right? So you can see right here, bearish, and then dragonfly doji comes out, and then it'll become bullish. So from here, for bearish trend will be bullish first, and then right after that will be the gravestone doji. Okay, so just inverted. So just remember, if you can remember the first one, meaning the bearish reversals one, then you just flip it. Okay, then it'll be for the bearish one. Okay, so next I'll be going through with you guys the top two candlestick patterns. Okay, so what are the top two candlestick patterns? So firstly, we definitely have the engulfing candles. So bullish engulfing and bearish engulfing. It's very simple for these engulfing candles. So engulfing just means that it's bigger, right? Like you engulf, like engulfing fire, etc. So for bullish engulfing, we can see that there is a small little red candle, smaller red candle over here, getting overshadowed by a big bullish candle. So just remember, like this one is just, usually how I remember is that I have different anatomy, I have different ways of remembering it. So for me, I just remember that this is like a child right here, and this is the adult right here. So once I see it, I will immediately know that, okay, this is a engulfing candle. Okay, so for bearish engulfing, it's very simple. It's just the opposite of a bullish engulfing. So smaller green kid, bigger red adult, right? So it's just the big one taking care of the small one. Okay, so yeah, that's how I remember it. Okay, the second one will be tweezer bottoms and tweezer tops. These candlestick patterns are not really seen often. basically when I see these candlesticks patterns, once it is formed, I would immediately jump into the trade because but of course with other confluence factors as well, because usually I don't see these candlestick patterns that often, and once it happens, it actually reverses quite a bit. So I'll grasp this opportunity to trade when there's these candlestick patterns formed, right? So just very simple. It just looks like two equal sized candlesticks, candle bodies, and then two wicks right there. So it shows signs of reversal. Okay, so yeah, let's move on. So the top three triple candlestick patterns. Okay. So what are the top three triple candlestick patterns? So we have the morning star and we have the evening star. Okay, so morning star pattern just means that is bearish, then bullish, bullish. Okay, so for evening star is bullish, bearish, bearish. Very simple and very straightforward. So basically, sometimes you can combine these candlestick patterns. So maybe morning star pattern together with your engulfing candlesticks. Yep, so this would be very effective for you guys. So just remember, this one is actually pretty important because you will encounter these candlestick patterns quite often. Okay, so for three black crows, basically we have the three black crows right here. So meaning is the opposite of the three white soldiers, right? So three black crows just means three bearish candles in a row, and then you can, that's your confirmation for a sell trade. Okay, so for your bullish trade will be three white soldiers, so three consecutive bullish candles. All right, so this is extremely easy to remember. So if you guys are maybe confused or anything, just let me know and I'll do my best to answer them. Okay, so far so good, guys. Yep, if it's okay, just let me know in the chat box below so I know that everybody's on track with me. Okay. All right, so top three, the last one will be three inside up. So this may be a bit more difficult for you guys to notice it, but basically, let me just explain it to you guys. So three inside up, meaning that this first bearish candle, okay, will be bigger than the second. It just looks the same like this, but okay, it just looks the same as the morning star pattern, right? Bearish, bullish, bullish, bearish, bullish, bullish, right? But these candles, the closing of these candles at the bottom has to be almost equal, okay? And this bullish candle has to be above these two candles right here. So just remember, the important part is this bullish candle has to be above these two candles, okay? The body has to close above these two candles, all right? So you can see right here also, the bearish candle, these two are equal, okay? The body closing, remember here, equal, right? Equal. And then this candle has to close below these two candles right here. Okay, so equal bodies for the first two candles. And then the last candle, to confirm the push, right, will be, has to be bigger than these two candles. Okay, so just remember, guys, this is a little bit more difficult to spot and maybe harder to get used to, but usually these candlesticks are pretty effective. Yeah. Okay, so how can we combine these candlestick patterns with what we have learned so far? Okay, so there are a number of four different ways where you can combine your candlestick patterns with what we have learned. And firstly, of course, we have the old school support and resistance levels, right? Secondly, we also have our trend lines. Thirdly, oscillator indicators. So oscillator indicators would be like RSI, your MACD, right? They are more of a overbought, oversold, where price would tend to move to. Okay, so momentum indicators such as Ichimoku cloud, right? A moving average, those are your momentum indicators, and like where showing the overall trend of the chart itself. Okay, so later on I'll jump to the charts to show you guys what I have for you guys, so that you will understand how you can actually trade these patterns with on the chart itself. Okay, so just give me a moment. Okay. All right, so let me just go through the different charts first on the slides, and after that, I'll be showing you guys on the live chart also and what we can watch out for. Okay, so what is a pullback resistance? So for pullback resistance, it will be this support level right here. Okay, so this support level right here, and price has already broken this support, and we're waiting for price to go back up to this support, previously support level. And once the support has been broken, it becomes a resistance, right? So what I always tell my attendees, that support broken becomes resistance. So SBR, support becomes resistance. And for resistance, if it gets broken, it becomes a support. Okay, so just remember, SBR and RBS is very simple. And once you just say it maybe 7 times in your head, you'll probably memorize it already. Okay. Okay, so for pullback support, right, just now I said for resistance, once it has been broken through, it becomes a support, right? Okay, so let's move on. Okay, how can we combining this with trend lines? Okay, so combining this with trend lines, we can see that if the trend line is being broken, okay, then we need this confirmation of the candlesticks. But also, if you are looking for a they're looking for it to continue being downtrend, then you should also look for our candlestick confirmations. Okay. Okay, how can we combine this with channels? So we have multiple points right here. First point, you can see these wicks over here is rejecting this channel resistance, right? And then we can see right here, price has actually respected this channel. Okay. And then right here, price has actually respected this channel, and respected this channel. So we can understand that at this point onwards, I am looking for a buy, right? Unless price has actually closed below this channel, then I'll be looking for a sell because it'll be a breakout, right? But if price is still within this channel, then it'll be a reversal. Okay. All right, so how can we combine this with resistance and Ichimoku cloud? So you can see right here, this is a, what is this? Support last time, right? Broken through, okay, coming back up to become a resistance, okay? So this is what we call a overlap resistance because price has passed through it multiple times. So this is what we call a overlap resistance. And essentially, we are looking for a sell right here because of the momentum indicator, which is the Ichimoku cloud. So price is becoming bearish soon enough. We're expecting it to become bearish due to price being under the bearish Ichimoku cloud. So when price is under the bearish Ichimoku cloud, and we can see that there is a overlap resistance right here. So what we are left with is confirmation of the candlesticks, right? So for a reversal, essentially, what are we looking at, right? If you guys can remember, we are looking at for reversal candlestick patterns, we are looking at the Morningstar pattern or For example, like the graveyard doji pattern, right? So we are looking for these patterns, okay? So let me just dive right into the charts itself, and let me just show you guys what I mean by this, okay? All right, don't mind the messiness. Let me just pick a pair. Okay, so let's see. Two- Okay, let's start with simpler ones first. Okay, let's see this. Okay, so if you guys can see it, let me just use this. Okay, so what was this previously, right? It was a resistance, correct? Okay, so price broke past it. What did it become? Support, right? And then price continued here onwards, okay? So once price has broken through, this is a pullback support, right? Because it was once a resistance right here. Okay, let me just refine it. All right. Then now price is becoming a pullback support area right here. Okay, so we are essentially looking for a buy, right? And your stops could be either below this area. For me, because I like to keep my stops minimal, and I usually tend to trust in the levels that I place because of the different confirmations that I have, right? So let's say if I were to take a trade, maybe I have a FIBO right here. I would say 50%. Okay, it's around the 50% FIBO retracement level right here. So this is my zone. So I'll place it around here. Okay, so my target is essentially this higher to be taken out. Okay, so I'll place my target here and I have a very nice RR of 1:3. Okay, so I have my levels, right? So this is my target. So I want to buy here, right? So let's say I'm right here. Oh, okay. Never mind. We are using a different account, so the replay button doesn't work, okay? But just imagine right here that we are currently looking at price to go up here, right? Okay. So what's next? If let's say we are at this candlestick right here, okay, this green candlestick, can you see? Okay, this green candlestick, and then once price jump here, I don't have my candlestick confirmations yet, right? Because what about my engulfing candles? What about my the candles that I've mentioned previously? So let me just single. I think this is a morning star. Okay, so we can see right here. Okay, if I zoom in, okay, can you guys see? Right? Let's say price is already here. Okay, this green candle over here. Okay, then we can see we have a morning star pattern over here because bearish, bullish, bullish, right? So this, and this. Okay, so from here, I wouldn't hesitate because of my key level. I know that price has already once rejected this area, right? So I know that price will not be able to break past this because I'm on the H4 time frame. Okay, let's see if we can find anything on the H1 time frame. Usually my entries will be on the lower time frame. Okay, so just remember that. Let's see. Okay, we don't really have, on the 1 hour time frame, we have a bearish engulfing already right here. So if you happen to catch this, that's good for you. But if let's say I'm looking at the 4-hour time frame, okay, and I notice that there is the morning star pattern right here at this area. Okay, so I will buy, right? I'll buy here, wait for the candle to close, and I'll straight away buy it. So it'll probably close right here. Right, remember, open of the body is the candlestick will open right here, and close will be here. So once it closes, I'll place my SL slightly below the 50% retracement level, and this overlap support, pullback support level. Okay. So next thing I know, let's say I go to the 1 hour chart. Okay. Let's say you miss the entry, right? You have another entry right here because of these 3 white soldiers. Okay. Bullish, bullish, bullish. Okay, so let's say you miss that one, you enter maybe here. Your stop loss is still pretty high, but at least you can get a, let's say we're targeting this area, you still can get a 1:1.47 RR. Okay, so usually I would tend to stay away from trades that I have already missed because it's not a optimal entry, right? So yeah, I would have missed that trade. Let's say we are going to usually and just a tip for you guys, usually your entries would be at the 50-minute time frame. So let's just go. Usually 15-minute time frames are the time frame where you can catch the trade, right? So you see here, my entry will have been so much nicer, right? Because I have confirmation right here. I have a very bullish engulfing candle. Okay, so I will have entered right here. Okay, and my stops will be placed here. So this is called refining your trade. And then I will have a better RR. So let's say my target is over here because I want to take out this high. This high is right here, right? So okay, so we're aiming for a buy trade up here. And you can see once I am running 1:1, I'll say around here. Or yeah, I'll shift my SL to BE. And if price takes out this high, my first target will be this high, and I shift my stops to BE, right? Because I know that price will actually from here to here, how many pips is that? 50 pips. That is really good enough. So I'll shift to BE first and then close 30% of my trade. So at least I'm in profit for 30% of it, right? Then let the 70% run to hit my TP. Okay, so once this area has been taken out, once we have this break of structure over here, so US, oh, sorry. Okay, so we have a BOS right here. Okay, so our next target is definitely this level over here. Okay, So it took a while for price to actually, let's say we go back to the 4-hour chart. Okay, it took a while for price to actually take out this area, right? But yeah, it's about a week before price actually took out these highs. But if you are patient enough and you trust in your own strategy, you will have made a 150 pip trade. Okay, 1:3 risk to reward ratio. Okay. So this is the breakout that we mentioned previously. So breakout, right? And then come back down. Price broke out, come back down, acted as a support level, right? You can see breakout, come down, acted as a support level around this area. Okay, then it bursts up. I would say here could be another opportunity for you guys, maybe on the 1-hour time frame. Right, you can see breakout right here, engulfing candle, boom. Just place your stops below here. Targets this high. First target will be this high, and then you're good to go. Okay. Usually I will trade breakouts instead of reversals, because breakouts are more reliable in a sense that I know if there's a breakout and there's a retest, then my trade will probably hit and along with candlestick confirmations, right? Okay, let's see whether there's other examples. If we go to 4-hour, let's see. Or this is not very nice. I'm looking, okay, so personally, I'm looking to buy around this area right here for GU itself. But if I were to go to the 15-minute time frame, I would definitely want to see, okay, if you guys can see, right? So let's say I drew out the resistance zone right here, like this area whereby it wicked out, right? So what I'm looking at will be essentially a buy trade, right? So immediately I saw, okay, there was, what is this? So it's a doji candle, right? So doji followed by engulfing candle. So once there is this combination of these two candles, they are essentially a 70% hit rate that you work out. Okay, so I will have entered here. My stops I put below this low of the doji. Okay, and my target, don't be too greedy. I will either target this high right here. Definitely not this high or this high first. Price has to take out this high before it can go further, right? So if I were to put it here, resistance. Okay, and then once I have run 24 pips, so okay, once price is around this area, I will have shift my stop loss to break even. Okay, very simple but effective strategy, and this is how some people actually trade price action only. So they just draw out their supply and demand zones, their support and resistance levels, and then coupled with these price action candles, they will not hesitate to actually enter the trade because they know that you will eventually work out either 60 to 70% of the time. Okay, so yes, and this is a potential reversal trade to the highs over here to eventually take out this, even this high right here. So if you were to enter maybe mid of this position, because of course, let's say if you even go down to the 5 minutes, right? You can see right here, what do we have? Can anybody take a guess? What do we have here? Just now we went through together, right? Okay, we have the 3 white soldiers right here. Okay, so we have 3 consecutive bullish candles. So this is one confirmation. Then of course you can definitely enter here. You can definitely enter here after the candlestick, right? So you place your stops below this candlestick right here. So you have refined your trade a little bit more. So your target is 3, 1:3. Okay, so you can see price actually reached here after a while. But of course, once price is maybe like if price is maybe 5 pips away, just close it. You don't want to risk having to wait so long. How many days is this? You don't want to risk waiting for maybe up to 12 hours just for price to take your TP for 5 pips, right? Just give them that 5 pips and walk away with how many pips is this? Walk away with 75, right? Okay, so yes, let's see what else we can look for. Okay, so essentially, remember I was looking at this trade, right? Right here. So let's say this area is where I want to buy again. So what am I actually looking for, right? I am, okay, let's see on this 1 minute time frame. Okay, so I'm looking for price to break past these highs, right? So essentially, do this, okay? So this is what I'm looking at for GU currently. And I'm actually looking for this trade right about soon, right? So see how I can refer this. Okay, none of it works right now. Okay, but so far, I'm in my point of interest. I'm in my area. I'm in the area whereby I'm looking for a buy, right? Okay, so if I'm looking for a buy trade up here, right? Essentially, but on the higher time frame is actually very bearish. So I will avoid trying to squeeze in a trade right here. But instead, let's look for another pair. Okay, so how about any one of you guys want to share with me like what pairs you guys want me to look at and I'll see if I can actually catch a potential trade. Go USD, okay. So let's just go through both of these, okay? All right, give me a second. Let me tidy things up a little bit. Okay. All right. So actually, from this area, for gold, right, we had price has really, this was our sell zone, right here by one of my colleagues, because we have the 23.6%, the direct link for this webinar there. Oh, I don't think I'm able to do that because I don't really have the link to watch this webinar again. I'm not too sure about that. Yes, I'm so sorry. I don't know. I don't really know where I can get the direct link for this, but I think it is on the YouTube itself. So yeah, this is actually recorded. So I think they will upload it on the IronFX YouTube channel. So you can go there and watch it. Yep. Okay, so for let's carry on. For this area, we have the 23.6% Fibo retracement level and the 61.8% Fibo projection level, right? Okay, so this is our sell zone right here. And you can see on the let's go to 50 minutes where our entries are at, right? Okay. So this is essentially our confirmation because what we have, we have the 3 black crows right here, right? 3 black crows, can you guys see it? Okay. This first candle, second candle, third candle, okay? So this is essentially your short position. Your targets could be placed above this sell zone area. And your target will be this low right here for it to be taken out, okay? But of course, during which you will face multiple hiccups, okay? So just, you can draw a Fibo right here. Okay, so this level, maybe at the 38.2%, you'll see that price is actually okay, so from here, the 38.2% retracement level is essentially a point where price may actually overlap support level, right? You can see this overlap support level, price has touched it multiple times. And then so you highlight it, okay? Filter out the 38.2%. So once price comes down, right, shift your stops to break even. Okay, so this is how you manage your trade. And this is just an idea for gold. I think if gold comes back to this level, right? This level right here. Don't be afraid, just and you are able to enter this trade, because if you enter here is your optimal entry. And for gold to have a less than 30 pip stop loss is actually pretty good. So I would say right about here, right about this area right here is a good sell trade. Okay, But of course, remember guys, your candlestick confirmations are very important. So just remember that, okay? Right, for the 4 hour, yeah, we are looking, this is essentially a small pullback level. Oops. This is essentially a small pullback level right here. Okay, so we are expecting worst case scenario, price comes up here and we can sell, right? If this area, but this area looks too good for us not to sell. Okay, so just keep in mind, we're looking for sell for gold. And okay, let's move on to Euro USD. Okay, so for Euro USD, all right, we have a projection right here for the lows to the highs to the lows, right? So we predicted that price will actually come to this 61.8% feeble retracement level. Okay, so this support has been broken. Done. So this is our first support right now. So this shift down, support becomes resistance after it's broken through, right? So just keep it here. Hold on, let me just make it simpler. Okay, this is our first resistance. This is our first support. Okay, this is our second resistance. Done. Done. Okay. So now we have a clearer view. Okay, if we draw a Fibo from here to this high, where is our 127? Okay. So we have our second support over here. Right. Okay. See, very simple. We have our 61.8% projection right here at our first support. Okay, if it breaks through, it will most likely go to maximum the 100% Fibo projection level combined with the 127.2% extension level. Okay, so I would say if it breaks there, this level, because we have a break of structure right here, so this order block looks very, very good. So the trend is bearish. Yes, the trend is bearish because you see from this top right here, bearish all the way. So if let's say I on the Ichimoku cloud is below the bearish Ichimoku cloud, so the trend is definitely bearish, but we're looking for a reversal trade, right? So this level, okay, this is where I'm essentially looking for a buy. Okay, of course you can buy here because we have a pullback. All right, let me just we have a pullback support right here. So essentially this could be our first trade, right? So price come down here, bounce up, do something like that, right? So this is what we're looking for. But if price doesn't do that, then our next entry will be here. No. So yeah, I'm trying to find a ideal trade. Maybe here. Yeah, so this is what I'm essentially looking at. Yeah, that's for EU, right? But of course, some people they will just tend to put it all the way here, but I find it no point. Why not just put it right below this area? whereby there's a wick right here, right? Means price is not able to push down from this area right here. Okay, so we have two entries for Euro USD. One is here and another is right here. Okay, but of course, I feel that this area is much more of a confirmed buy entry because we have the Fibonacci confluence area right here, 127.2% extension level and 100% Fibonacci projection level. So yeah, that's what I'm looking at. Okay, so yeah, so I hope you guys have enjoyed this session as much as I did, explaining to you guys about price action patterns and how you can use it on a live chart. And yeah, I hope thank you guys for being so attentive and listening to me. And I really appreciate it. And thank you for your time, guys. And yeah, that's the end of my webinar. And I hope you guys have learned something new, of course. And I'll see you guys in the next video. Bye bye.